Well, we're only a handful of days into 2013. It's been quite a robust year. I'm here with Nicole Erkin, who's Jim Cramer's research associate for Mad Money. She does a lot of the background work there. Nicole, one of the exciting things this week has been JP Morgan's Healthcare Conference. What were some of the themes you were looking for going into it, and what did you get?
Yeah, like you mentioned, the economy has been robust so far this year, but macroeconomic worries abound. We still have some global concerns. We still have trepidation in the U.S. about the debt ceiling and whatnot. So we keep wanting to return to themes where we can make money. And we've had a bunch of CEOs on Mad Money this week from the JP Morgan conference talking about exciting new pipeline drugs, ways that they're continuing to make money and hopefully making money for shareholders. One name, Biogen, multiple sclerosis play. It has a core MS franchise, but it's actually developing new drugs like BG12. Really interesting here. Look out for March. That's where the approval date for that drug will be. It's oral MS.
Celgene also popped this week after they were at the JP Morgan conference. What was the key there?
Celgene's a name we've continued to have on Mad Money. Revlimid, blood cancer drug, continues to grow. They had some great other additional data from pipeline candidates. This is a name that's bankable, and you want to have it on your radar in the healthcare space this year.
What are some other themes or other stocks that you're looking at in the biotech space now? I mean, it is a hot sector.
It's a hot sector, but it's also a volatile one, especially some of the more speculative biotechs, particularly ones that trade around FDA decisions. One group that's been particularly strong is orphan drugs. And these are drugs that treat diseases that affect a very small population of people. So Alexion and BioMarin have been two standbys that continue to be strong. We had on this week a smaller off-the-radar name, MPS Pharmaceuticals, worth taking a look at if you're interested in that space.
I can't let you get out of here without talking about big pharma. Eli Lilly, they were at the conference for one, and it's this big patent cliff that everyone's worried about. So what are you expecting?
Right. No one wants to hear the word cliff anymore. Patent cliff, fiscal cliff. But Eli Lilly is a name that is the quintessential patent cliff worry name. And it's continued to perform well, which shows that pharma, despite the worries, is managing by cutting costs, by investing in their pipelines, by offering dividends to pay you to wait. So Eli Lilly remains okay here. Jim Cramer talked to them on Squawk on the Street. That said, right here we prefer a name more like Bristol Myers, which Jim Cramer and Stephanie Link own for the charitable trust. It just got approval for Eliquis with Pfizer. It's a blood thinner drug. And it just has a little bit more in the pipeline here, still offers a pretty solid dividend and is well positioned in the current environment.
All right, but do you like Bristol Myers a little better?
Yeah, we like Bristol more than Lilly. And even within pharma, you can diversify. You can have a more speculative biotech, and you can have your standby pharma. Of course, there are very different risk profiles for those two groups, but Bristol is definitely a buy right here.
All right, well, that's her take on the healthcare sector. Be sure to check in with Mad Money to see more of her and Jim's top stock picks.